Hello mortgage fans, so we're back for another mortgage market update, this time for October 2023. I'll try and resist as many Halloween puns as possible, but it's fair to say if you were looking for positive economic data, it was fairly scary. This was particularly acutely felt in sort of the mortgage and property world. There's been extremely low levels of purchase and remortgage activity, and if you look at the context of that, it's not hard to explain why. People are constantly seeing headlines around mortgage rates falling, property prices falling, and that's just a recipe for inertia. So if we look at sort of the golden question then really is how much longer will this trend continue? So obviously we're a mortgage broker, so let's focus on the mortgage side of things. Although we did see quite big falls in headline mortgage rates through October, and I'll come back to some sort of market data and headline rates toward the end of this update, it seems to have tailed off now. Mortgage cuts have sort of levelled off, money markets have levelled off, and that was fueled by the inflation data that came out in October. So the headline inflation rate stayed at 6.7%, when many had predicted a fall. There was quite a large knee-jerk reaction to that in the press, saying mortgage rates are going to go up again, the Bank of England are going to raise rates, but I think more level-headed commentators, and certainly a view I subscribe to, means that we're going to see a prolonged period of the Bank of England keeping rates at 5.25% now. That's probably the most likely outcome. Now we've got the Bank of England meeting this Thursday, 2nd of November, and also we've got October's inflation data released in November. They're going to be huge drivers around what happens with mortgage rates in the coming months, because lenders don't price for sort of today or tomorrow, they have to look 2-5 years down the track. So it's as important as what the expectation is as opposed to what's actually happening. So I think sort of things holding steady where they are now is probably the most likely sort of outcome. So I think mortgage rates will probably hold at this level until that period's washed out. So if we look at this again, so specifically in terms of advice, what does that mean? That's all great, but what does it mean on a practical sense? Now, what we've been advising for our clients for some time now is to go on a penalty-free tracker. I believe 54% of all mortgages we arranged last month were on a tracker basis. That is the most we have ever organised in a sort of 9-year history as a firm. We're looking at that because the Bank of England is predicted to move the base rate back to 4.5% within about a 5-year window, so from where we are today, which means fixed rates still look a little bit punchy. So I think if you were to sign up for a fixed rate today, I think that's likely to be cheaper in the coming months ahead. Hence why being on a penalty-free product, principally a tracker, but there are other options, means if then rates do dip in the new year or later, you can then take advantage of that. Equally, let's say for example inflation falls more steeply and the Bank of England cuts rates faster, you can win. Or let's say something really unexpected happens, which seems to happen all the time, you then have the flexibility to swap out in a completely different product. So that's why we think flexibility is key right now, hence why a majority of our clients are taking trackers, and I expect that to continue for the coming months. One sort of thing I did want to pick up on as well is I saw quite a lot of headlines where a lot of people are staying with their bank right now. So your product comes to an end and you just stay with your existing lender. I completely get that. In a sort of cost of living squeeze where people might think switching lenders is difficult or may not be able to do it at all, staying with your existing lender does seem like a good option, and it may well be your best. The thing I would just say is it's still important to get advice. Because while your bank is going to offer trackers, fixed rates, long-term, short-term, it's very specific as to what is best to you and also what your lender offers. What I've talked about is a bit of a sort of high-level summary, but your lender may not be able to do the things that you're after. There might be different ways of managing things. So please always speak to a broker and get some advice, even if you're sticking with your bank, because we can advise on their range of products, what is best for you, and ultimately how you save the most money. And that's where we always come from, is how can we put more pounds in your pocket and not the lenders. So last point I want to touch on, because it's been a while since I've done an update, and we have got a number of partnerships launched over the last few months. So as a little quick recap, so while we do mortgages and protection, so obviously we'll look at those two factors, there are other areas where we're not authorised, we don't do that, and we have great partners. So the headline ones are going to be around pension and investments. We've just linked up with one of the best IFAs in the country who can look after you in that regard. Equally, they have an equity release arm, so whereas we can arrange mortgages where you make the monthly payments, if say you're over age 55 and looking to pay off the loan, either when you sell or when you pass. That's called equity release. We do have a partner for that now as well. We've also recently started with a corporate and asset finance firm, so if you're lucky enough to be buying a yacht, plane, expensive car, classic car, large property abroad, all those really funky things, they are the right partners to speak to. Equally, if you own your own business or have a controlling function in the business, they can help you arrange the finance for that as well. So they're a great partnership for us. That's been a really good one. Some more long-standing things we have is anything around legal work. We've got some great partners in terms of simple conveyancing if you're buying a property, right up to M&A activity, corporate stuff. So whatever you're looking to do in the legal arena, please do talk to us and we can connect you to the right firm. Accounting is an obvious one. I run my business and I've got a fantastic accountant that we work with. They offer fantastic rates if you're referred via us. So if you need advice or looking to switch providers, please do contact us and we can help you out on that front. And of course we've got our outsourced HR function. That's a new thing that's recently launched. So again, if you're a small firm like us and don't want to sort of put that in-house for all the raft of regulations you have to adhere to these days, again, great firm that we work with, and I'll happily refer you on to them, and they offer a discount on their fees also. And lastly, we do have our beloved AFC Wimbledon, who we partnered with a few months ago. So quite a lot of our clients have enjoyed their hospitality by going along to games, getting boxes and just enjoying the ground. If you do want to get down there to Plough Lane in the heart of SW19, let us know and we'd love to help. So to cap off, the money market rates and mortgage rates that I mentioned. So just in summary from where we are from last month. So in October, we saw 5-year money go down by 0.115% to 4.427. 2-year money is down by 0.225% to 4.866%. 3-month sterling LIBOR is down 0.035% to 5.374%, and the Bank of England held at 5.25% because there was no meeting in October. So how that translates into mortgage rates, so market leading rates currently available. 2-year fixed rates you can get from 4.9, which is down from 5.34 the month previous, hence those falls I was talking about. 5-year fixed rates start at 4.64%, and that's down on 4.82 from the month before. 10-year fixed rates held steady at 4.94%, and you can get variable rates from 5.38%. With buy-to-let, that starts at 4.09, but it's a very complicated relationship around the fees, which we'll happily guide you through. But they're sort of the market-leading headline best rates that you can get. The actual rate you'll be offered is dependent upon your situation and level of deposit. Please do speak to us and we'll let you know exactly what that will mean for you. So just in summary, it is a complicated picture out there. Now more than ever, expert advice is needed. So if anything on here is touched on something you need to talk through, please do contact with us directly with the mortgage and all the other things that I mentioned. We do want to be your one port of call for anything sort of financial or business related. If we can't help you directly, we absolutely know a partner that can. So until next time, thanks for listening.